Hey there, Wall Street winners. It is April 30th and pre-market trading has begun. We can see in the Bloomberg app the futures are sitting in the red, but only down slightly. The Dow down 40 points, the S&P 500 down 5.5, and the NASDAQ off 26 and a quarter points. So not huge. It's still early. We're waiting on some data this morning from U.S. government in regards to payrolls and employment. So we'll get that in 10 minutes at 8:30, and that could shift things depending on how those numbers come out, because that's kind of a lead-in as a data point to the Fed's discussion tomorrow. So the U.S. Fed is going to be talking again tomorrow. The big thing today is Amazon earnings. So after market close today at 4 p.m. or between 4 and 4:30, Amazon is going to release its numbers for the quarter, and the results of that will sway what happens in that stock today. So I think overall the expectations are pretty positive going into that. But that said, anything could happen. Before we jump into the Yahoo app today, I wanted to touch upon two things in the Bloomberg The Close email that I get every day. So you can subscribe to various emails from Bloomberg. They have an open email, a close email, and just two things in this one from obviously yesterday, April 29th. In the opinion section, one thing that I do want to touch upon that is really important, and it ties into these videos that I'm sharing with you, is that it can be extremely dangerous to design a strategy based on free advice. So what I'm giving you is effectively free advice. And it shouldn't be used in a vacuum. So the advice that you get from myself, who has a great deal of experience in investing, should be married with that of an overall strategy and game plan and goals that you have, as well as just a look possibly with maybe an independent financial advisor as to what your investment framework is. So my choices are obviously based upon having done all of that and worked with a group of advisors and having a plan in place and a strategy and executing on that strategy. So I'm not encouraging anyone to do that independent of having a more holistic approach. And that's really what this opinion piece says. The last thing ties into my strategy. So my methodology, for the most part, is to make short-term, often day investments into different stocks and allow for and try to time basically an uptick in those stocks so that I buy at what I consider to be a valued price or a discounted price, hoping that that stock is going to move higher during the day or coming days, and then sell that and take a small percentage profit on that increase, and just rinse and repeat that across multiple stocks and multiple industries and sectors, depending on what's really hot in the market. And one of the things that I've found through that investment philosophy and approach is that the first 30 minutes and the last 30 minutes of trading are where you can often sell at a premium or buy at a discount. And it's going to vary day to day, but that's where there's a fair bit of movement and activity. You'll notice, if you've been watching any of these videos over the last 3 months, that stocks tend to pop in the morning or dive in the morning, and then they'll either continue to go up or they'll retreat downward, all depending on the day and the stock and the news. I can't tell you what's going to happen every day to every stock. Otherwise, I'd be a billionaire or a gazillionaire. But you'll find that there are these pops, and there are trends, and they don't always occur, but more often than not, you can pick out a trend. And the same is true at the end of the day. So at the end of the day, if you see a stock trending higher throughout the day, it'll often pop a little bit or trend higher through to the end. So it's a great idea then to hold off till before 4 o'clock when markets close and sell it at the end to maximize your gain. Now, there's nothing to say that it can't dip and fall off, because that does happen. But again, watching that trend, you might get a feeling for that. The same thing could be that stocks have dropped down and kind of corrected throughout the day, but then they pop up near the end. And how you can tell those trends are occurring is not just watching the pattern of the individual stock, but also watching the pattern of the market. So if we go over to our Yahoo app and just explore this concept a little bit further, things that I'm looking at during the day when I'm making trading decisions, specifically, let's say for tech stocks, is I'm looking at what the NASDAQ's doing. So if I look at the NASDAQ chart going into today, I can see that it has a kind of a low range in the 17,000, call it 870 range. That's kind of a bottom. And then it has a top that is in the 17,905 range. So it has a spread of about 40, call it, 40 points, somewhere in there, right? From bottom to top. So with that in mind, that could be, I'm not saying it is, but it could be the envelope, the trading range for the day. Now, we are waiting for some economic news to come out in 3 minutes, so that could shift the envelope size here. But I'm going to use that and that spread to kind of gauge what other stocks are going to do. So if we look down to the tech stocks today, you'll see that pre-market, we've got CRM off about $3. We have some of the others off differing amounts. If we take a look at AMD, which I believe announces today as well, it does, it's up 1.45%. So it's definitely up more than the overall market, but it is going into earnings, and it seems to have some upbeat feelings around it. I think this could be a very attractive stock today. What we saw yesterday, the reason for that is what we saw yesterday is NXP Semiconductors came out and announced better than expected results and a very positive forecast for the coming quarters. And that's caused that stock to jump about 4% pre-market, or $9. So if we get something similar from another semi manufacturer, which is AMD today, we could see a similar bump in that stock. And if we go back to the 1 month, what we've seen is as some of our semis have kind of dropped off between April 9th and 19th, they've also started to pick back up. So if we think about this 1 month chart here, and then we pop over to, let's see, another semiconductor like NVIDIA and look at the 1 month chart, it didn't start its drop on the 9th. It actually popped up, let's say, till the 14th, but then it did start to come down, and it was low as well on the 19th, and now it's started to recover. So I look to see then if AMD, if we look at that over 1 month, what it's doing as well, and it dropped as well into April 19th, and it has started to recover, but it hasn't recovered as much as some of the others. So there may be a bigger upside opportunity here and less of a downside opportunity because it hasn't made that recovery. So even if earnings they kind of miss expectations, so earnings may hit and exceed, but maybe future forecasts are off a little bit, the likelihood of this one dropping may be a little lower. So that's kind of how I look at things when I'm evaluating whether it's a good price and whether I feel there's value in there to make a decision. So I hope that helps you. I hope you are fortunate and have some luck today and make some money in your trades. If you like these videos, please hit the like and subscribe